Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADMISI Services International Limited. And here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. An indecisive spinning top yesterday, though it was not far away from being a dragonfly doji pattern, inherently a bullish pattern. If it had been, then it would have been an immediate countering move to the previous session's pattern, which could, on the one hand, be seen as an indecisive spinning top, but on the other hand could also be seen as a key reversal down. Anyway, the market's range was captured within the layers of the congestion zone between 120 even and 115.70, dropping down to the 2014 high at 115.70 and finishing just under the May 2012 high at 120 even. Overall, the market is still taking a breather away from the two recent descending triangle patterns formed since March. Potential targets in the upside for these descending triangles, as well as the double stroke triple bottoms formed over the same period, are as follows. For the larger March to April descending triangle, I have a potential primary target X1 in the 132.10 area, with a harder to get secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I had a primary target X3 in the 120.5 area, which was reached 2 weeks ago, and a harder to get secondary target X4 in the 129.20 area. For the double stroke triple bottom pattern, I have a potential target X5 in the 126.5 area. Finally, with only today to go, so it's only today, we are set up for a possible weekly key reversal this week. If we close tonight either above 122.02 or under 119.70, then we'd be on. Anything in between have a lesser outside week. Well, right now we are looking at a lesser outside week. So far today, a slightly higher opening outside the congestion zone 120 even to 115.70 and a dip down to just under the 2017 high at 119.19 before a resurgence back up and out of the congestion zone, though not that far. Spot gold. A bullish closing white Mariboso and second bullish white soldier yesterday. It was more than a suitable follow-on higher to the previous session's bullish engulfing pattern. This time, markets pushed up and closed over the flatlining long moving average, currently 1844. It was a further move higher and away from the middle time, currently 1821, of the breached early March to late April bearish shift pitchfork, and a high that was a little over the flatlining long moving average, currently 1844, before closing roughly equidistant between the middle and upper time. The upper time currently is at 1893. Overhead we have the following resistances. The 50% Fibonacci, the March 21 to March 22 move at 1873. The declining short medium moving average currently 1879. The flatlining medium moving average currently 1893, and the upper time of the bearish shift pitchfork. Meanwhile, below the middle time we have some congestion at 1807, then 1789, plus the May low at 1787. Then a congestion zone between 1879 to 1784. With a further congestion at 1771 and finally the December 21 low at 1753. Well, overall the market has set up the conditions for this week to be a weekly key reversal. If we close tonight either over 1872 or under 1868, then we'll be on. Anything in between then would have a lesser outside week. Right now we are looking at a weekly key reversal down. So far today, a seeming limited rejection of the idea of going higher, as prices opened and dropped straight away. They have dipped below the long moving average, but are having a hard time staying below this important moving average. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADMISI Services International Limited. And here comes the final bit.